let's start with having you each introduce yourself. Start with you, Will.
Great. Hi, everyone. My name is Will O'Brien. I'm a serial entrepreneur, an angel investor, and crypto investor. I was in the Bitcoin world. I started about 2012. I was the founder CEO of a security firm called BitGo. I'm an LP in Blockchain Capital, and I advise a number of other funds like Arrington Capital, Dispatch Labs, Fabric Ventures. And I also invest in the space pretty actively in some of the foundational projects like Telegram and Orchid and Civic and some others. So happy to be here and happy to be here with all of you.
Hi, everyone. Also happy to be here. So I started looking into blockchain when I was in high school, actually, mostly from a governance use case. So I was looking at how distributed ledger tech could be used in political systems. When I think it was about a year and a half ago, I was on the founding team of a project called Zencash that is building a privacy ecosystem based on a directed acyclic graph. So I was part of that project until this summer, and I moved a little bit back to what I had originally been working on, which was in the fund space. I used to work at a hedge fund for a while and then also VCs. And so now I advise and am a partner at a few funds based in Asia. And I also run business development for a company called CoinFi that is building financial tools for the crypto space.
Great. Philipp, Stauffer. I'm, as you might hear from my accent, I live here now in Silicon Valley for 17 years, but I moved from Switzerland. I co-founded FYRFLY Venture Partners with Julia Allegra, my partner. We invest and are active in the ecosystem around data and intelligence for many years. And blockchain as a technology is clearly core to that. So our fund focuses on that and our private activities as well. I'm also very excited that Switzerland actually plays a big role in this, so it looks like a perfect storm is coming together, so I'm very excited to be here. Meet quite a few Swiss people as well, but it's a very international audience, and I'm super excited about all the discussions I already had outside the panel. Manie?
Hi, Manie Eagar. For my sins, I was part of the team that set up the first Bitcoin ATM in the world in Vancouver, British Columbia, and you can still see it at this Waves coffee shop in Smythe Street if you do visit Vancouver. From there, I helped found the Bitcoin Alliance of Canada, and it ended up being the chair of the Blockchain Association of Canada. I feel partly responsible for Switzerland chancing upon this whole blockchain scene. I was part of the team who advised Ethereum when it was still in a basement in Toronto around where do we launch this thing from, and we felt that Canada and the US weren't ready from a regulatory and other perspective, and somebody who had just been to Switzerland said, why don't we go to Zug? And the rest is history. So I think that all led to us being here today. Very exciting journey. And I can see how over the time things are leveling up from the regulator, from the government perspective, and the industry as a whole.
Great, thank you. So this panel is called Capital Market Transformation with a Blockchain Technology Positively Impact the Market. And capital markets is pretty vague. Can you guys give me a specific example of blockchain being used in capital markets? Anyone?
Well, to back up a little bit, I think we should first define capital markets. So the way I see them, at least, capital markets essentially allow savers to put their capital to work, long-term productive work, right? So in the traditional space, that capital markets are usually facilitated by electronic trading systems, which are managed by different institutions and intermediaries that make up the financial market as a whole today, right? So as it pertains to blockchain, I think people have started thinking about blockchain's use case in capital markets because mainly two reasons. One is that wealth is essentially inflated due to the amount of debt. So there's actually more claims to wealth in the market right now than real wealth backing those claims. And then the second one would just be the fact that ledgers in traditional financial markets tend to be inaccurate just because there are so many intermediaries between actual issuers and investors, and the cost of reconciling these ledgers is prohibitive, and also the burden also usually falls on the investor. And so that's at least the framing through which people have started looking at blockchain's use case in capital markets. And then from there, I guess this conversation will probably come from two different ways. One would be financial institutions actually building in-house enterprise solutions that incorporate blockchain somehow. And then from the other side, crypto firms that are building scalability solutions that have certain features that could be leveraged within the financial space.
Yeah, maybe I just wanted to add on that note, the examples that I've seen, and we talked about JP Morgan as well, among others. I feel like the the established companies are more working on blockchain companies, but it's much more about cost saving than really building something new. It's less about, let's say, decentralization or the original idea of blockchain, but more using or trying to use a new technology for cost savings, right? Which is a little bit different. So we have all these hybrid initiatives, and I think we're still in a phase in the market where we're trying to figure out where it's going. So I don't think there's too many good examples yet.
I'll give two examples. Bitcoin, store of value, and the ICOs, which is an alternative to financing. I think those are the only two real use cases of blockchain at scale today. I worked in capital markets in a variety of areas in my career. Used to build real-time trading systems for the banks, built a payments business, and then as an entrepreneur, raised tens of millions of dollars in venture capital, went through the Series A, Series B kind of models. And I think when I found Bitcoin, it was obviously, to me, when I read the white paper, it was an opportunity for financial freedom and financial inclusion for the rest of the world. That was the promise, and I think that is emerging on its path. In the ICO market, putting aside the mania, I think what's really interesting is we're moving from a model of investing in companies like a Dropbox or a Facebook that ultimately become a monopoly in their specific vertical, funded by Silicon Valley, to investing in protocols that are open source mostly, that are decentralized, that allow anybody to contribute and have an economic incentive to contribute to that project. So when the ICO market came around, and Ethereum as that platform for ICOs, I think that is a new model for capital markets. That's really something to pay attention to, that we can build. Take an example, like Orchid is a Tor network with a token incentive. The mission is to make internet communications private. So they're building an open network that everybody can participate in and contribute to, and they're not going to own it and control it and manage it themselves. So the token sale is purposeful to fund the perpetuity of that project. So those are the two use cases that I see at a high level.
So as the technology and these applications are emerging behind the scenes, and I'm chairman of Quantex, a full service or a full stack, if you wish, financial services provider trying to leverage these technologies on behalf of government, central banks, exchanges, and the general capital formation market. And the driver there is where we're starting to move from the analog era into the more electronic or digital era. People are looking for more frictionless ways in which they can do these transactions, move away from literally paper-based and electric transfers, which is what exchanges are today, into a world where there's greater access, there's greater liquidity, and it can happen cross-jurisdictionally, which is, as we heard before, it's puzzling governments, regulators, and everyone at large, but that's what's going to happen in future, and I'm sure we're going to touch on security tokens, tokenized assets, which is a complete game changer. Still very early days, but going to be a game changer, enhancing and supporting and creating those trillion-dollar markets that is going to allow for high-frequency trading, derivatives, and futures. That's going to happen on top of this soon, in time to come.
We're seeing banks dabble in blockchain and settlements and selling securities. Is this something that is actually going to happen? Are they really going to make this technology work in that regard, or is it kind of a pipe dream?
I can speak again while you're all thinking. Behind the scenes, and again, it's not public because a lot of the stuff has to go through planning and testing phases. If you've ever tried to pass a security or get a security certificate, I used to work for Barclays, it takes 6 to 12 months just to clear all the hurdles before you can launch these things. So a lot of behind the scenes development, they absolutely are looking at this. The trading desks of every major bank in North America that we've spoken to is very keen on this if and when it starts to happen in a regulated, compliant fashion. No one wants to get ahead of the game until there's certainty. So Switzerland, I think, deserves a shout out where they've made much progress and have followed a more nuanced approach and has become a role model. As people from the European Union said to me, they're treating Switzerland as a kind of sandbox for Europe, and I'm starting to see movement there. I see similar approaches happening here in North America, Asia, and elsewhere.
Yeah, I agree. I think it was harbored in the innovation budget for some time, but I think we're now moving towards more commercial use cases. It's just happening behind the scenes, and there's a bit of an observation, test, and invest mode right now. But absolutely, it's on its path.
I think I'm pretty excited as well about when blockchain technology or distributed ledger technology becomes scalable enough to actually be used in the financial space. And so as layer 1 and layer 2 solutions start working together to solve these problems, using side chains or directed circuit graphs or alternate consensus mechanisms, I think once those partnerships are more solidified, we'll then see enterprises kind of step in and realize that finally these transactions are actually inexpensive enough and fast enough to make real impact in traditional spaces such as financial markets, logistics markets, things like that.
I think just in terms of entrepreneurship and established players, I just think there's huge amounts of money at stake in order to even change something, right? So I think it's very important to think about where are actually then these innovations coming from. Are they coming from new players, or are they pushed by the players who love the life of centralization? Because obviously there's a lot of money made there. And so I think I'm an early stage investor and entrepreneur, so for me it's always important to see where is the use case coming from and from which camps are they pushed. And I'm not talking, actually I don't like to talk about disruption at all. It's not about disrupting something that is there, it's really inventing something new that makes everything more efficient and productive. And from that perspective, I haven't seen much, mainly because I feel like capital markets were just too early in the cycle of where we are today with crypto assets in order to do it right. And if we have time, we can talk about the last bubble, what went wrong there. But I feel like we're at risk to make the same mistakes again.
I'll give you an example from Korea. I have 5 companies in Korea now. One of them is called Insurium, and it's about putting insurance in the blockchain. So you mentioned cost savings before. They're partnering with large insurance companies who are interested in blockchain, and they're looking to create micro insurance products that could only be settled and managed via a blockchain technology, right? It's just not cost effective to do that with traditional kind of insurance processes. And so using a combination of all the technologies we have available, blockchain, AI, and automatic adjusting and so forth, there's a way for large insurance companies to partner into this industry, and if it makes sense, then they can ramp that up inside their own house. But for right now, they're doing it through a partnership.
So do you think that's going to be the way it goes coming from the outside? Because we're seeing Coinbase is trying to get a license to basically become a bank and sell securities, whereas we're also seeing traditional banks trying to incorporate blockchain. Is one going to win out? Is one a better direction to go? Where do you see that?
I think it will be a typical cycle of innovation is coming, incumbent tries to neglect it until it has to embrace it, and then there will be acquisitions and things start to merge together. The insurance space is actually a really interesting one, because if you look at insurance today and the main products, there's probably 10 products globally that have more than 80% of market share. But if you look at what people would really like to insure, there's thousands of more product opportunities that are currently just not addressed, right? In different countries, and so on, in different asset classes and so on. And so the insurance space is a great opportunity for entrepreneurs to go in and kick that process off, but it will lead to a very typical cycle of innovation and then incumbents embracing it, which is great, right?
Yeah, so again, from the institutions and the incumbents, they see crypto, they're not in the weeds as maybe some of us are in terms of crypto this or crypto that. They just see it simply as another asset class. And if it fits the mold from a regulatory perspective, why not trade it? So everyone is preparing and getting ready their desks for this and the tokenized asset and other stuff that's coming. So they're certainly not asleep. I've not met one institution who wasn't at least very aware and busy with something or looking at partnerships in the space. So I think it's going to be a mixed approach. And don't forget, if you're already an incumbent in a market and you already have a database of users, who would you go to? The people you know. So they're obviously going to leverage that advantage and position in the market and bring these new technologies to bear, which cuts out the work for any new innovations, ICO, startups in the space, to go up against that and try and reinvent how this game gets played. Very exciting time.
I do think there are more granular considerations as well when thinking about whether Coinbase, for example, or traditional banks are really going to break into the banking for crypto market. Like one being custody solutions, right? So there are a lot of really difficult security issues with custody for crypto assets, and institutional investors are hesitant to allow any crypto bank or entity to hold large amounts of crypto assets for them for this reason. This is something that Coinbase is actively working on, and I'm kind of the opinion that tech will be developed by these new companies and by the ecosystems that have aligned incentives that can attract developers and the kind of network you need to build products that can be tested on a consistent basis and eventually be deployed in a variety of environments. So I think the tech solutions will likely come from the crypto space itself in terms of, to your point about all of the existing customers that banks and institutions have, if they get their hands on the kind of products that are coming out of the crypto space, I think they will definitely have like an easier path to commercialization and to onboarding existing clients from the traditional equity space into investing in crypto assets.
So is that the holdup? Is it a technology thing? Is it regulatory? Why haven't they all done this yet?
Yeah, I think it's a combination, quite simply.
I have a great case study right here in California. One of my clients is one of the largest dealers in precious metals in the United States, where in California, precious metals for IRA, for retirement annuity, is treated as a commodity. So is crypto. You can invest in California and 7 other states in the United States in crypto for your IRA tax-free, which is astounding. And people are starting to move some of their precious metals portfolios into the space. It's fully regulated. Obviously, it needs custodial services. They can't hold it themselves with vaulting. So it's the same game that they used to vaulting silver and gold. They now vault sticks with crypto assets on them, and they've just seamlessly moved into the space. So I see those kind of transitions happening where the regulation and the market is ready to accept that, and that kind of example will spread into other markets as well, where there's readiness and appetite.
Yeah. I mean, there's definitely a lot of activity. One team I love is Etherisk, we're kind of reinventing insurance in the likes that you and I just talked about. But it takes time. It's a lot of entrepreneurial work to actually work through, understand regulation, understand different jurisdiction on how global insurance works. And the beautiful of digital and crypto, it's a global business, right? And so I think there's a lot of really good things happening underneath the surface, but I think it's still years away of like actually seeing the impact.
Yeah.
Where do you think it's going to happen first? It's definitely not going to be the U.S.
In terms of geography?
Yeah.
Well, I'm biased, I'm Swiss, but I stop until I answer.
The US is where the money is, and so is the case in other jurisdictions. So I think people who are prepared to follow the regulatory regime and can figure it out will have first mover advantage. So I wouldn't kill off the US or Canada, for that matter. Canada, by the way, we were going to regulate until a week ago, and the regulator backed off until 2020. They put everything on hold for political and other reasons. So I think each jurisdiction is going to play this in a different way, but I certainly see Europe emerging as a block, as a trading block in this space. Asia speaks for itself. Earlier speaker said Asia is the big sleeper in all of this. I've done a few trips to Asia now. The appetite there is huge. The people get this. If anyone has sent money back and forth to anybody on WeChat, for instance, in China, they've been doing this for a long, long time. They just don't call it tokenization. I was involved in the M-Pesa project with Vodafone in Africa. The airtime transmission of money used to be called a token, in fact, in the patent paper. So we've been doing versions of this for quite a while. But again, where the appetite is there, the regulator's there, the technology is there, it will happen.
Yeah, it's really an interesting game of trying to figure out which jurisdiction is best for what type of business in the blockchain space. And speaking of Asia, I was just in Korea, and the government, the ministry there is not really outlawed ICOs, but they're discouraging it. But 40% of the young people are trading cryptos, and so many companies are pivoting to do a token sale and what they call a reverse ICO in that market. You have 50 million people in Korea, a large population in Seoul, and in one generation, Korea went from a very poor country to a very high-income country in this incredible, proud achievement, economic achievement, and now the blockchain seems like another opportunity for the young people to build wealth and to build industry, and so there's so much attention on it, but the regulatory environment is still uncertain. And you have that kind of in every part of the world. It's slightly different. In the U.S., it's its own challenges. You end up paying $300,000 to $500,000 to lawyers and tax advisors as a startup to figure out how to launch, a Cayman entity and a Singapore entity to raise money through a token sale from non-U.S. investors. It's really challenging as an entrepreneur to take, to move forward and just build a good business and good technology in this space. So I think that's a challenge that we can collectively overcome and with more clarity.
Yeah, I think as entrepreneurs. A lot of entrepreneurs are wandering around globally trying to find the right jurisdiction right now. I think in your own due diligence as an entrepreneur, I think it's a good idea to also look at history of a particular country, because a lot of, and it's typical, right? Like it's gold rush, and a lot of different countries want to jump on the bandwagon, and you have to look at, is this just to take the opportunity now, or is this long-term, a long-term commitment? And the reason why I'm excited about Switzerland is Switzerland in 1291 was founded out of frustration of centralization, really, with bloody wars and whatever, but like 3 cantons came together, and because of the big powers around now Switzerland, and since for the last 725 years now, like Switzerland built this, like is fighting for decentralization, and defends everything that centralizes stuff. Like there's a lot of power to the cantons or to the states, much less on federal level. And so you see that now evolved into a legal framework, into mindset, into pretty much anything, right? As an entrepreneur coming out of school, you come to Switzerland and you think, oh wow, they're very welcoming for crypto, but it might have a deeper background. So I think it will come out of countries who have a deep appreciation for decentralization, because that's the whole concept behind it. And we will see a lot of things of blockchain here and blockchain there, as we see now AI everywhere. But the true, I really feel like the true concepts and teams that will succeed are the ones who have a deep appreciation for having decentralized mechanisms. And you see that in Bitcoin, right? I mean, Bitcoin is a true setup from that perspective, and is kind of, when I looked at the audience, a lot of divestment out of other assets, and everybody still holds Bitcoin.
What about venture capital? Are we going to see them getting more involved in ICOs and buying Bitcoin and Ether?
Yeah, I absolutely. It's think they were asleep at the venture capital industry was mainly asleep at the wheel for the first part of the ICO phase, and then jumped in heavily earlier this year. I liken the ICO vehicle to a wedge between Series Seed and Series C of venture capital. So I think there will always be a role for growth stage venture capital. And if you're building a business that benefits from the strategic partnership of the venture capitalists, then it makes sense to go to Sand Hill Road. But if you're building a protocol where you can incentivize developers around the world to contribute to the project and build something in decentralized, distributed fashion, you don't need to live in California, pay California tax and cost of living, and try to hire people here. It's actually you can use the token sale and token economics to build a game-changing protocol that disrupts some of the monopolies that have been built by the venture capital industry. So I think there's going to be a bifurcated future where venture capital will play a role in industries and businesses that need that kind of strategic partnership with the venture capitalists, that connection to the rest of the portfolio, and there'll be this new class of technologies and projects that are built in the token economic fashion.
I also think funds that are specifically crypto funds are interesting, and maybe their kind of strategic advice and their offering to startups has not really been analyzed by the rest of the venture capital market very well. I think there's a big difference between taking money from a traditional VC and taking money from a crypto fund. Nowadays, crypto funds, especially because the market to get in allocations to private placements is more and more competitive, crypto funds have such a wide range of offerings, such as like marketing advisory, like running community management channels, smart contract auditing, market making, liquidity management services, legal services, like I could just go on. And I think as we're seeing funds diversify their offerings to essentially create full stack incubators and service providers to support startups, that's going to look very different than the offering that VCs are able to provide, which will probably be more along the lines of like strategic go-to-market advice, like real high-value, smart money advisory versus like kind of nitty-gritty on the ground. You know, I'm actually deploying my community managers to run your Telegram channel. And so I think startups that have a piece or give pieces of their product to both traditional VCs and crypto VCs are pretty well set to succeed, just because they'll have such a holistic ecosystem of support that transcends just like traditional crypto people who just think about, you know, decentralization and tech, but also goes into true venture capitalists who, you know, have worked in the industry for 20 plus years and can really see a good product when, like, even if they don't understand entirely what the crypto use case or risks are.
Yeah, but a lot of these crypto funds are flipping tokens as soon as they can sell them. So how is that really long-term helpful? They're really helping to pump the price and then dump it.
That was mostly earlier this year and the year before. Now, actually, founders are getting smarter and they're just putting a lockup in place. And so usually when funds invest in pre-sales, they can probably flip like 10 or 20% of their allocation once it lists on the first exchange. And then after that, they have to hold the lease for a little bit amount of time. But I've also seen agreements where strategic investors who are kind of promising to be on board for a couple years at minimum will have different lockup structures where they can't flip at all.
But at the same time, the market is evolving fast. Again, I've never seen a market evolve so quickly as this space. It's super exciting. What we're starting to see from a VC perspective, the VCs are starting to wake up to this opportunity. Now, I think they're going to come roaring back, especially when we start seeing tokenized assets. Because suddenly there's something there. There's a physical asset, there's a property, there's IP has been built, or there's a sustainable business. I'm talking to a lot of ICOs, well, what used to be ICOs, businesses now that did their first initial small raise, they built some value, they've actually got a product, and now they want to do their next raise. So I see VCs coming in there. I hear from a lot of VCs that they're starting to build either portfolios or crypto fund capacity and dabbling and selectively stepping into this market. I did a research with my team. There's about 20 jurisdictions now around the world that's getting regulatory ready and starting to understand the ICO game and creating certainty from Switzerland to Singapore all the way through. So people are also, I think it's Thomas Linder from MMU coined the term ICO tourism. So we see a lot of ICOs travel the globe, and I meet a lot of people from conference to conference, checking out, looking at where's the right location to do stuff. And it's not that they're necessarily abandoning the United States or Canada, because they're sitting up in a safe space and then stepping back into these markets because it's a global market that we've opened up here. So I see a hybrid model with both crypto funds reaching back into the VC style of funding with assets, underwriting, and VC starting to dabble into the fund of funds or crypto fund space. Again, great opportunities.
Well, what about security tokens? Because securities have a lot of rules. You can't just flip it. Who's that going to be attractive to?
Well, so in general, I just believe, like, I come to security token afterwards, but the landscape of investors, of VCs, pure crypto funds, other investors is, if we wipe that all, right, and say we're all just investors trying to generate returns, then you have to be aligned with the team, right, with what they want to build, and you have to be aligned with the approach they take, the strategy, and you have to be aligned with what you actually can invest in. So if you, for example, if you're investing in a foundation and it's a donation, then you're kind of more a philanthropist than an investor, and you might have different motives and are not looking necessarily for returns. But the discussion often is just around the token and generating a return after token, even though the landscape or let's say the attributes of a certain token are misunderstood or not, due diligence is not done the right way, or they're just experiments, right? And so the security, what actually happened in Switzerland, which is interesting, by a law firm called MME, is they put down a really interesting framework on categories of tokens in order to also collaborate with FINMA and the government to say, okay, so how do we actually structure this? So there's no misunderstanding. Certain tokens clearly have this purpose, other tokens have that purpose. So so regulation can also be a little bit more vertical, right? Not just like all over the place. So I think to that question, it will require really a lot of collaboration of entrepreneurs, law firms, financial experts, capital market experts, and then the government to find the right format. And I think Switzerland has done a great job there, but I don't think Switzerland is like in an absolute lead position. There's other countries. It's really like a horse race right now, which is great. But bring it back to the discussion of blockchain, I think it's important to stay true to what blockchain really was supposed to do from the beginning, which is pushing decentralization. And the countries who do that best, I think, will define the best formats of those tokens, and then eventually win.
Look, the advantage from a US and Canadian perspective is, and I can speak for the territory that I'm in, is there's also a very rich ecosystem here, which is why a lot of ICOs would love to stay here if they could. But it's becoming, it's quite hardcore, the SEC and OSC on our side. I had a very worried party call me 3 o'clock yesterday morning. Apparently they're now even going after platforms, that if you're an exchange and you provided the software and the hardware for that exchange, and there's nefarious activity on that, like in the old internet days, I don't know if people remember, they used to go after the people who provided the server capacity. They're now even doing that. So we really need to be informed for any average ICO or entrepreneur. This is a big job to figure out, where am I safe? I'd like to operate where I know my market, but at the same time, you need to balance where am I getting my money from, where am I going to do my business, and yes, have I got good qualified customers putting money through my system that's not going to get me a knock on my door in the middle of the night.
So back to security tokens, do you see that becoming something that's going to be a big trend? Or are we not there yet? I mean, I thought it was going to be like the next big thing, but I don't really see anyone investing money in security tokens right now. But the SEC considers most of these ICOs securities at this point. They've sent a lot of subpoenas.
My opinion is we need to see more experimentation and use cases, and some of them will succeed and some of them will not. I think your question is, are you asking if it should be embraced by regulators as well, or should it be now be adopted by entrepreneurs and basically?
Well, is anyone investing in this since there isn't really clear regulation around it?
My perspective on this is that it's it was kind of everyone started saying security token because they're worried about utility tokens, and no one just really figured out what that is yet. And the big problem with security tokens is aftermarket liquidity, because the exchanges are not securities exchanges that are providing that liquidity to utility tokens today. And so then you could think about some of the major securities exchanges kind of embracing crypto, but this ecosystem needs to be built. You need to raise money for a project, you need to build what you're going to build, and then you need to provide the liquidity to investors and ongoing liquidity to the network. And so the security token is in infancy there. I think it'll happen, but it should happen for the right use cases. The everything is a security and let's make it all security tokens was a very just silly kind of expression of the market a few months ago. And I think that'll normalize and you'll have the appropriate type of token for the appropriate use case. It's worthy to note that the other two classes of investors that are coming into this market are the major platforms. Like if you take like an EOS raised $4 billion, and now they have EOS funds around trying to get companies to build on EOS and other platforms like that. And then the major exchanges like Binance are actually investing in projects. And so those are very, very aggressive investors, right? Where they want to push innovation forward. And so as an entrepreneur, again, you have this laundry list. Okay, what country do I go to? What kind of token do I do? Who do I take money from? How do I get aftermarket liquidity? How do I stay safe? It's a very confusing blend of things. And so the security token will play one role in that matrix of the overall crypto market at some point in the future.
I've just come from the street, as in Wall Street. I always like to go and ask the people on the ground what they think. And tone there was caution. Let's see how this evolves. I think the SEC came with a statement that the security token is still a security. So people are like, okay, tokens, we've now seen where tokens go, and a lot of people got letters, so they want to make sure that doesn't happen in this case again. So I think quite correctly, they want to see an evolving ecosystem that supports this and makes it tradable in a compliant manner.
Yeah, I've quite a few discussions with existing and potential investors in our entities. And what I would probably say is that you have definitions that are getting clearer and clearer around security tokens, but then you have investors who look for a certain definition, so there's certainty that certain things will not happen in the future. And I still think there's a gap. So therefore, it's not happening yet, but it's moving closer together. And I'm an optimist, so I think it will happen. Yeah. But don't ask me for a time frame.
Yeah, I was just going to. So everything's still really early right now. What do you think? Just Bitcoin, is that like a good investment, or these ICOs? It's kind of crazy, the market right now. I mean, it's not really encouraging. What are your thoughts?
The market's up 10x from 2 years ago. I think it's a great market.
Well, I guess all the people invested, a year ago.
Right. Well, I think that's why it goes back to the classic understanding of what you're investing in, right? So a team that can scale, a team that can address the changes in the market. There has to be a real purpose for the token. There has to be something, just adding a token to a business that's not needed doesn't make it a better business. We don't need blank on the blockchain. And so I think just, this is like a wake-up call to really evaluate the purpose of this investment and whether it can stand the test of time with the regulatory uncertainty, with the market uncertainty, and with, the hovering incumbents and forces that be who always, crush or buy entrepreneurs. But I personally like to invest in in entrepreneurs who have a passion, who want to move innovation forward and find a way to help them. I'm kind of a player, coach, investor, right? Advise and invest, and then try to, kind of help these pirates move forward and do something really good for the world. I like the word disruption because I think we do need to have a lot of disruption to create a lot of freedom and create a lot of opportunity for the rest of the world. I remember when I was founder of this company called BitGo, and we were the first to launch multi-signature wallet. And the first thing I did as an entrepreneur with my A round, raised 12 million A, I invested in 2 groups in Washington, D.C., Coin Center and Digital Chamber of Commerce, to go start talking to the regulators and the lawmakers about custody and multi-sig. And I flew down and met with the Secret Service and met with Congress as 2 weeks after I raised this capital, because there needs to be an education step. And so at this stage, we're now at a new phase of the market, and I think investing in the entrepreneurs who are going to put that investment into educating the world as to where this blockchain is going to take us is really important. And those are the ones that will be durable investments.
Yeah, my advice to investors, that's actually also what we do. We have always a long-term view. There's Amar's law, which is one of my favorite curves, right? Like human beings assume impact of technology is linear, but it's actually flat for a long time, and then eventually it has a huge impact. So short-term, we overestimate, and long-term, we underestimate. And I think we're definitely overestimating right now. We're not at that tipping point yet. So I think as an investor, you have to think, what are you in for in blockchain? Are you in for what this could really do? In 20 years, I'm sure we'll look back to today and we'll say, this had a huge impact. I mean, in '98, when Amazon asked you to put in the credit card number, you're like, that's ridiculous. And in 2001, when everything crashed, you're like, see, I told you so, e-commerce is all bullshit. And now it reached like $1 trillion like this week or last week? Last week. Now it dipped again, but it will go up. If you look at that curve, anything in 2008 looks like a little blimp, right? And so I think you really just need to look, I think that we totally agree on that, you need to look at the quality of the teams and what they're really up to, and is this aligned with what blockchain will do, and staying for the long term. So with Bitcoin, definitely, for me, this is a long-term bet. I made a mistake too, by the way. I got involved very early, but then lost quite a bit on a mountain in Japan, and then stayed out for a while because it was frustrating, right? But so I did a mistake. Actually, I believed in long term, but I got out in the kind of hype. And I think staying for the long term, that's my advice.
So we ran out of time. I'm sure the panelists will be out in the alleyway, and you can ask some questions. Thank you so much.